If you really understood what chaos is not randomness. Chaos is a much higher form of order. And what I'd like to suggest that you remember from this presentation is that the next time you hear the word chaos, as in the science of chaos, chaos is a bad name. The real message or the real meaning of this science is how you handle new information. So chaos is new information.
Chaos is often misunderstood as randomness or disorder, but as Bill Williams explains in the second part of his groundbreaking lecture, chaos is actually a higher form of order, and the real secret lies in how we process new information. In this session, Bill takes us further into the science of chaos, showing why it's not something to fear, but a powerful way to understand the markets. This part will completely reshape how you see patterns, uncertainty, and amazing bow-its to death, and decision-making as a trader. Let's dive into the second part of the lecture.
We have a talent for misnaming things. You and I think right now that we're talking with our conscious mind, or we're communicating with our conscious mind, right? The left hemisphere up here. But that's the only part of your brain that ever goes to sleep. It's the only part of your brain that is really unconscious from time to time. And yet we call it the conscious mind. If you really understood what chaos is not randomness. Chaos is a much higher form of order. And what I'd like to suggest that you remember from this presentation is that the next time you hear the word chaos, as in the science of chaos, chaos is a bad name. The real message or the real meaning of this science is how you handle new information. So chaos is new information. And we call it chaos, but it's new information is a much more descriptive term. Then we come to the part of how do we handle new information, because up here on the chart what you see is new information every time you look at a chart. The first thing you have to do, or the first thing we normally do when new information comes in, we try to organize it. We try to put it into old categories. So we say, well, what is it like? It reminds me of this, or is it like this? What we're doing is we're massaging this new pristine information and putting it into old categories. And we'll squirrel it around and bend it around and make it plastic so it'll fit in there. I had, in my younger days, I had a bad experience with a lady who happened to have red hair. And I judged from that experience that any female with red hair is absolutely no good. So today when I see a red-headed lady, unless I catch myself, I've already made a judgment. I don't even know who she is. I've never met her. But this is because I've massaged this new information into this old categories that stay away from red-headed women. Now we all do this. We all try to organize any kind of incoming information. Once we have anything organized, it doesn't matter whether it's a note you're taking or the IRS or whatever, there is a strong tendency, the first priority of any organization is to survive. Now we're in an election year, and not so much now as we get closer to the election, but last year there was a lot of talk about doing away with the IRS, getting a flat tax, a consumption tax, or whatever. Can you imagine what would happen with the hundreds of thousands of employees at the IRS, the hundreds of thousands of CPAs and tax lawyers if we really tried to do away with the IRS? They're going to try to keep that thing going. Once a bureaucracy in government is established, it keeps going. In the market, once a bracket goes, it tends to keep going. Once a trend goes, it tends to go further than you thought it would. Remember back in the mid-'80s when some of these wild-eyed skeptics and specters were saying that, gee, you know, the Dow's going to go up above 3,000. It's going to go to 3,700. And everybody was poo-pooing that. And what happens? It's almost twice that now and still on its way up. Anything that is organized tends to survive, or that's its primary function. We were having a discussion not long ago about the economy of the world, and we were talking about what are the biggest movers of money in the world. And we came up with four. The four biggest money movers in the world, and nothing else in the world can come close to any one of these four. And those four are war, medicine, religion, and insurance. Think about that for a moment. War, medicine, insurance, and religion. And they all have one thing in common, and that's death. And all of us don't want to look that in the eye. We want to survive. There's an old country song whose verse goes, everybody wants to go to heaven, but nobody wants to die. which points out some of our paradoxical kind of thinking. But think about it. You have war to kill people and break things, right? And if you don't kill somebody and you wound them, you put them together with medicine so you can send them back and shoot them again. And those who get shot and killed, you've got insurance to send some money home to sort of ease their pain a little bit. And then you have religion to take care of the ones who were shot. But all four of these biggest money movers in the world have to do with death. And it has to do with organization. Now let's look at some of our personal organizations. Here you are in a profession of trading commodities. Your job as a speculator is to take risk that other people don't want to take. And if you do a good job, they'll pay you outlandishly for taking those risks off their back. But what did you learn? What was the first thing you learned as a kid? Not to take risk, right? Don't touch the hot stove. Don't go across the street. You learned before you had any intelligence to make a decision to be risk adverse. Let's say you're a 2-foot-high person here. And you're adventurous, you're out there trying to learn what the world's about, and you're entering the terrible twos, as they call it, and your mama says, don't touch the hot stove. Well, you don't like that, so you bite her on the leg. And then she whips you a little bit, and you get this idea, this organization comes in, this new information organizes itself, that I'd be a lot better off if I wouldn't bite her on the leg. And then you take this into adulthood, and when somebody says something to you, you don't bite them on the leg anymore. Well, we do the same thing in trading. We don't trade the market. We trade our own personal belief system. Any questions at that point? One of the things that we talk about in chaos, and one of the things that chaos theory tells us, there are 3 principles in chaos theory that are important. And you can see these principles at work in the market every day and on every 1-minute and 5-minute chart. First principle is that everything in the universe, everything, takes the path of least resistance. Now, you are here because whatever was going on in your life, this is the path of least resistance. You're sitting where you're sitting right now because that was the path of least resistance for you at this moment. What you will trade tomorrow or Monday will be the path of least resistance, and the market will take the path of least resistance. That's the first principle. The second principle is that this path of least resistance is determined by the always underlying and the usually unseen structure. For example, let's say you have a river running down a hill. That if the riverbed is shallow and narrow, you're going to have rapids. If the riverbed is deep and wide, you're going to have a calm pond. It's not a decision of the river. It's a decision that's dictated by the riverbed. Let's take another example. Let's say that you had to go to the bathroom right now. Well, the bathroom is straight over there. But you wouldn't go that way, would you? What you would do is you'd get out of your seat and you'd go down the aisle and you'd go back through the door and then you'd turn left and go down the hall, 3 doors, and then you'd turn left and go through that door. Why did you take all that circuitous route when the bathroom's over there? Because you've learned long ago that you're better off if you don't try to walk through walls, unless you're Superman. But when you were doing that behavior, when you were going to the bathroom, you were probably unaware that your behavior was controlled by the architect who drew up this building and by the building contractor who put the doors in the hall out there rather than straight to the bathroom from your seat. The same thing happens when we're trading. We're affected by things we're not even conscious of. So the first principle is everything follows the path of least resistance. The second principle is that path is determined by the always underlying and the usually unseen structure. And the third principle is that unseen structure, that unseen underlying structure can be discovered and it can be changed. So the underlying structure of our belief systems that we trade can be discovered and it can be changed. Just like the kid who doesn't bite mothers anymore, that structure can be changed. Let's look, for example, at a couple of things about the market and the underlying structure. What happens and who moves the market? The first thing that moves the market is out there in the whole complex of trader land, there are changes in attitude about the market. I think it's going up, and I'm not sure it's going up. I think it's going down. And that kind of change. And remember that for every change in the market, it always happens where there is an equal disagreement on value and an agreement on price. And that first thing that happens is somewhere out there in trader land, a group of people who may not be together but scattered all over the world looks at the market and looks at the chart and says, hey, this is not quite working out the way that we thought it was. So that's the first thing that changed. The second thing that changed is that produces a change in volume. Either people getting into the market, going long or short, or people getting out of the market, reversing their position, just getting out or going flat or whatever. And that changes in the market a volume and a possible change in the bias of the momentum and the direction of the momentum. Following that, that produces a change in the speed of the current momentum, and it may, again, change the direction. For example, the last thing in the market to change is price. And a lot of traders and a lot of analysts say, well, changes in price make changes in attitude. From our standpoint, price doesn't do anything. Price is the effect. The last thing to change is price. What changes before price is momentum. What changes before momentum is volume. And what changes before volume is all of these crazy decisions that we're making out there in bond land. Then the next thing that changes is the speed of the current momentum. It will either accelerate or decelerate. It's like a bowling ball, something heavy. And you take that ball and you roll it down the street. And as the ball is rolling down the street, it continues because it has momentum. If it meets a hill up here, it'll slow down on that hill, and finally it'll come back and go the other way. In market terminology, that's called a change in trend. But actually, from a physics standpoint, when it starts to slow down, it's really accelerating in the opposite direction, isn't it? And the market will tell you that. So when we look at the charts in a moment, the three things we look at, and the only three things we look at, are the price, where the balance line is, the acceleration, and the momentum. And we trade the market on these 5 dimensions. The next thing that produces is a change in the direction of the momentum, and the final thing that it produces is a change in price. And we trade this on a 5-dimensional basis, and we're going to show you exactly some of these dimensions. We won't be able to show you in this time span all 5 of them, but we'll show you some of them. Before we do that, I want to share with you a couple of things that from people who are trading this way. We have now trained almost 600 people in our private tutorial who are now professional, private, and most of them are successful speculators. These are 2 people who came to our seminar about 4 years ago, Charles Parker and Steve Winland in Houston, Texas, and this is a note that we got from them. Bill, I wanted to thank you for your guidance this weekend, as it was very rewarding, and closed as an article from Futures magazine. I'm sure you've heard of that magazine, this month. Just to show you how a couple of your students are doing, this was in December, and the headlines were the funds remain in a slump, and these 2 guys went out and established an offshore fund called San Juan Investments. And Futures magazine charts every month a little over 200 funds, and this was number 1. This was in October. Then in the following, this was in December, I'm sorry. The following October of the next year, it's interesting that they're still number 1 and number 5. 2 of the top 5 were trading exactly what we're talking about. And then 1994, notice down here the top performers for 1994 from Futures magazine, and you could believe anything you read in Futures magazine, was San Juan Investments. The thing that takes chaos from chaos to cosmos, which is unorganized or seemingly unorganized, to organized, is a thing called fractals. Now, fractals are nothing new, and don't be frightened by the word. When Columbus invaded America, the mathematicians back in those days were talking about fractals. And in the 1400s, in the 15th century, they were talking about, these are the theoretical mathematicians, they were saying, well, a dot has no dimensions. They were talking about dimensions. And they said a line has 1 dimension, a plane has 2 dimensions, a solid has 3 dimensions. And then they asked themselves the question, suppose you had a very curvy line, and if you have a curvy line, it's still 1 dimension. And you had this line, and it was so curvy that you had a plane, a rectangle here, and this line goes through here, and it's extremely curvy, and it goes back and forth and back and forth and back and forth, and then comes out the other side, and it shades 1/2 of that plane. What is the dimension of that line? Well, for 500 years they pondered that. And then a very brilliant scientist by the name of Benoit Mandelbrot came up with the idea that this is a fractional dimension. If it covers half of this plane, its dimension is 1.5. Now what that's saying is that in a chart form, an irregular scattered pattern will have a higher dimensionality than one that's very smooth. A straight line through this would have one dimension. If it were a plane, it would have two. Mandelbrot went further and he analyzed the fractal dimension of the Mississippi River. And here we go down the Mississippi River, and he found that the Mississippi River had a fractal dimension of 1.2610, which meant that it was curvy enough or staticky enough or back and forth enough that it covered 1/4 of that plane. Then the IBM management, and he's a professor emeritus of advanced mathematics at Yale and is also still working for IBM in Yorktown Heights, New York. They came to him and said, well, you know, it's nice that you're analyzing this, but it'd be more helpful for us, since we're supposedly a for-profit corporation, if you would analyze something that we might make a little money out of later. And he took a four-pronged approach. He said, okay, we'll look at economics, we'll look at physiology, which is medicine, we'll look at sociology, and we'll look at psychology. And from that, and by the way, directly because of that, we have two things. We have artificial hearts that work, and we have the World Wide Web. The World Wide Web would not work without chaos, and I'll show you why in just a moment. But what Mandelbrot did is he said, okay, we'll go and we'll study economics. And in Yorktown Heights, the largest database they had were corn and cotton prices. So he analyzed corn and cotton prices, and guess what he found? To 3 decimal places, they had the same fractal number exactly as the Mississippi River. And then they later analyzed the Ohio River, and then they analyzed the Tennessee River because it was dammed up and interfered with by man, and all of them had, to 3 decimal places, the exact same fractal number. The day that I read that, I did not sleep a wink all night that night, because it was like the curtains were opening. What it said was the markets are a natural function. They're not a man-made function, they're a natural function. So if you really want to see how the markets work, take a pitcher of water out here and pour it on the ground and watch this strange attractor gravity come in and pull it around the rocks and around the high places and the low places. So this was the Mississippi River, and this was the corn chart. Same exact thing. If that be true, then the science of chaos offers us a great deal in analyzing the markets and understanding the markets, and it may be a key to why technical analysis doesn't work any better than it does. It may be a better map in which to analyze the market, and we think it is, and we think that we can very easily prove that.
This was the second part of Bill Williams' groundbreaking lecture on chaos and the markets. In this session, he revealed that chaos is not randomness, but a higher form of order, a way of understanding how we process new information. He showed how our brains organize patterns, how markets mirror that process, and how everything tends to follow the path of least resistance. From personal belief systems to the flow of money across war, medicine, insurance, and religion, Bill makes it clear that the same structures shaping our lives also shape the markets. And when he introduces fractals, the picture becomes even more powerful. Fractals suggest that price action is not random at all, but part of a natural order, just like rivers, coastlines, and other forces of nature. Through this lens, technical analysis looks less like a precise science and more like the wrong map. Chaos and fractals may offer us a better framework, a way to see the market not as man-made noise, but as a living, natural function. And this is only the continuation. In the next part, we'll dive deeper into fractals, strange attractors, and why chaos theory could be the most accurate map traders have ever used. So stay tuned, because what comes next might completely change how you understand trading. I hope you enjoyed today's video. If you found the content helpful or engaging, please give it a like, as this helps the video reach more traders like you. And don't forget to subscribe to the channel and turn on notifications so you never miss our latest insights on the markets and practical trading strategies. Sharing this video with your friends or on your social networks can make a big difference and helps our community become stronger. Now, if you want to go even deeper and get access to exclusive content, early video releases, and extra tools to support your journey, consider becoming a member of the ComLucro Trader community right here on YouTube. It's a way to support our work and a smart investment in your own development. Thanks for watching, and I'll see you in the next video.